There is a number attached to this place that is more interesting than the purchase price, and that number is 2.75. That's the current VA mortgage rate that a qualified buyer could take over. We are in Kalama Tract, Kailua, on the windward side of Oahu. And this home has a 2.75% mortgage that a qualified buyer can take over. But here is the catch: nobody on the listing page is going to walk you through. There is a gap. We are going to break down exactly how it works and what it takes to capture that 2.75% in today's market. This is also a 1930s home, which matters in ways most buyers underestimate. We will get to all of it. Stay with me. First, a quick note on where we are. Kalama Tract is one of the most desirable Kailua neighborhoods, and that desirability comes from one specific thing: location. You're 2 blocks from the beach. You can hear the ocean from the front yard. Most of the homes here were built in the 1930s through the 1970s, the original character homes, still in their original condition, and a wave of fully renovated showpieces. Very little in between. That mix creates an unusual market dynamic here. The data tells a clear story. Move-in ready, recently renovated homes in this Kailua pocket sell quickly, sometimes at or above asking price. Older or dated condition homes also sell quickly but at significant discounts. Over the last 12 months, 9 single-family homes have closed in Kalama Tract. Of those 9, only 1 sold over asking. 2 sold at asking. The other 6 all sold below asking, sometimes significantly. The biggest gap was on a property that listed at $2,150,000 and sold at $1,750,000. $400,000 under asking, on a home that sold in just 8 days. The market here is going in 2 different directions at the same time, and the direction depends entirely on the condition of the property. The recent percent of list price received in this neighborhood is around 92% on the trailing 3-month and 6-month basis. The entire Oahu MLS is closer to 100%. So Kalama Tract has been giving buyers something Oahu as a whole has not been giving lately: actual negotiation room. If you have been watching the Kailua market and trying to figure out where the negotiation room actually lives right now, that is the kind of breakdown I do for buyers in private walkthroughs. Reach out through the link in the description or text or email me directly. I can also show you the off-market opportunities in this neighborhood that never hit Zillow. Now back to the 2.75% rate, because the math on that financing is where the real story for this specific home lives. A VA, assumable loan, is exactly what it sounds like. Instead of getting a new mortgage at today's rates, the buyer takes over the seller's existing loan at the seller's original rate. This is a feature that only really exists on VA and FHA loans. Conventional mortgages are almost never assumable. The current loan balance on this home is approximately $1,063,000. The monthly payment on that balance is approximately $5,745 per the listing. To put that in context, financing the same loan amount today at current market rates of around 6.5% would push the monthly cost significantly higher. We are talking about a rate gap of roughly 3.75 percentage points. On a $1 million loan, that gap compounds into tens of thousands of dollars in interest savings per year, every year, for as long as the buyer holds the mortgage. Over the full life of a 30-year loan, the total interest saved runs into the hundreds of thousands. Now here's the gap I mentioned at the top. The list price on this home is $1.625 million. The assumable loan balance is around $1,063,000. So if a buyer assumes the existing loan, they still need to come up with the difference. That difference is roughly $562,000. That gap has to come from somewhere. It can be paid in cash at closing. It can be covered with a second mortgage stacked on top of the assumption. It can be a combination of both. The mechanics of stacking a second mortgage on top of a VA assumption are not simple, and not every lender will do it. The buyers who actually capture the value of an assumable loan in a market like this one are the buyers who walk in already pre-approved with a lender who has done this kind of transaction before. 2 more things on the assumption itself worth knowing. First, the buyer has to qualify for the assumption. The VA and the loan servicer both have to approve the new borrower. Income, credit, debt to income, all of it gets reviewed. This is not an automatic transfer. Second, if the buyer is a veteran assuming the loan, they have the option to substitute their own VA entitlement, which frees up the original veteran seller's entitlement, so the seller can use it again on their next home. If the buyer is a non-veteran assuming the loan, the seller's entitlement stays tied to this mortgage until the loan is paid off or refinanced down the road. That is a meaningful trade-off for the seller that a buyer should understand going in, because it affects how flexible the seller is on the terms of the assumption. Before you even start negotiating, there are specific questions to take to a lender experienced with VA assumptions. Ask what the assumption fee is because the VA charges one. Ask how long the assumption processing takes, because it can run longer than a standard purchase. Ask whether they will write a second mortgage on top of the assumption to cover the gap, because not every lender will. And ask how the funding fee structure works for the assuming buyer, because it may differ from what a buyer originating a new VA loan would expect. Looking into the offer with those answers in hand is what separates a buyer who captures the value of an assumption from a buyer who tries and then realizes halfway in that the structure does not work for their situation. Why does the 2.75% rate matter so much in today's market? Because mortgage rates went from around 3% in 2021 to around 6.5% today. That shift roughly doubled the monthly cost of borrowing the same amount of money. A buyer who can take over a 2.75% loan, even partially, captures real, lasting financial value that no negotiation on price alone can match. Back to the 1930s piece, because it ties into something else this listing has going for it. The listing notes approved plans and an open permit already in place to build up and expand the property. Architectural plans, structural drawings, county review, environmental considerations, all of it adds up. Plans approved and permit open is months of time and tens of thousands of dollars in design and review costs that the next owner does not have to spend. A dollar figure on what that saves, architectural design, and the full permit cycle for a major addition or rebuild on Oahu can run anywhere from $40,000 to over $100,000 depending on the scope, plus the calendar time. So the embedded value of plans approved and a permit open is not a small thing. For a buyer who plans to renovate or build up, this changes the math entirely. The going-in cost already includes most of the design and permitting work. The buyer skips straight to construction. Combine that with the assumable loan and the energy package, the pool, the photovoltaic with Tesla Powerwall, the EV charging, and the package starts to look different than the headline price might suggest at first glance. One more thing about how price is built in this neighborhood that is worth knowing. The county tax assessor for this property values the land at $1,065,000 and the improvements at $313,000. So roughly 77% of the assessed value is the land itself, not the house, not the pool, the land. That ratio is common across Kalama Tract. Buyers in this neighborhood are paying primarily for the location and the lot. The structure is a smaller portion of the valuation. It is also why an older home in this neighborhood can still command serious money. The land alone is the asset. For a buyer who wants to renovate or rebuild, that math actually works in their favor. The lot is being purchased at market value, and the existing structure is a smaller portion of the deal. Let me put Kalama Tract in context against the other Kailua neighborhoods I have covered recently on this channel. On the 12-month rolling basis, Coconut Grove appreciated about 10% year over year. Keolu Hills appreciated about 8%. Maunawili sits basically flat at under 1%. Olomana sellers are getting on average over 102% of asking on their sales. 4 different Kailua pockets, 4 different stories, all within minutes of each other. Kalama Tract is doing something distinct from any of them. The 12-month median sale price here is significantly above the entire Oahu MLS median, tracks with the beach proximity, but the percentage of list price received is lower than any of those other Kailua pockets I have covered. In Kalama Tract, the data has been showing room to negotiate. That has not been the case in Olomana. It has not been the case in Maunawili. It has not been the case in Keolu Hills. This is a neighborhood that rewards well-informed buyers who can read the data and structure offers around it. One pattern in the sold data worth flagging for any buyer comparing properties in this neighborhood. Smaller homes here have consistently traded at a much higher price per square foot than larger homes. Homes under 1,600 square feet sold for around $1,280 to $1,500 per square foot. Homes over 2,000 square feet sold for around $800 to $1,300 per square foot. So if you're looking at this listing and comparing the dollar per foot to a smaller cottage that recently sold for more per foot, that is not a sign one is mispriced. That is the Hawaii pattern of land value dominating, and it shows up in every comp set. Quick word on zoning here. The property sits on a 5,000 square foot lot. The zoning is R10 residential, which calls for a minimum lot size of 10,000 square feet on any new subdivision. This lot is smaller than the current R10 minimum. That makes it what is called a legal non-conforming lot. Fully buildable, fully usable, just smaller than the modern standard. Most of the older Kalama Tract lots are like this, platted decades before the current R10 rules took effect. The flood zone here is X, the lower risk FEMA designation. Federally backed lenders typically do not require flood insurance in Zone X. That can save several hundred to several $1,000s a year compared to a higher risk zone. A small tax detail worth knowing too. The current owner has the homeowner exemption applied on this property, which keeps the monthly property tax at around $387. That low number tells you the seller is occupying the home as their primary residence. For a buyer who plans to use the property as an investment or second home, the exemption goes away and the monthly tax line goes up. If Kalama Tract or any other Kailua neighborhood is on your radar, the link in the description is the easiest way to reach me. Submit a private walkthrough request or text or email me directly. Closing thought on this home and this neighborhood. The headline numbers in Kalama Tract would suggest one story. The underlying data tells a different one. The negotiation room is real. The land value is the engine. The approved plans on this specific home cut out months of permitting time for any buyer planning to rebuild or expand. And the assumable loan at 2.75% is a financing tool that very few buyers will see again in this market anytime soon. For the right buyer, those four pieces line up. That buyer is not just shopping a property. They are putting three different forms of value into a single deal, and that combination is rare in any Oahu market right now, especially in a Kailua pocket 2 blocks from the beach. I'm Oksana with Island Living Oahu at Keller Williams. Let's connect, and I will see you on the next one.